Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else.
Friends, welcome to another video on your channel Profit in Equities. In this video, we talk about a dirt cheap PSU stock which provides a very high margin of safety and can be a strong candidate for accumulation. This stock can not only compound your wealth but can also protect your hard-earned capital. Historically, PSUs are generally considered boring stocks as they seldom reward investors with rapid spikes in share prices. But sometimes PSU stocks could prove to be good bets as they not only provide long-term capital appreciation but also protect capital. Here we talk about one such stock. Please watch this video to know more. Now the company in question is Bharat Electronics Limited, which is available at Rs 85.55 and the face value for it is 1. The symbol for it is BEL. Now Bharat Electronics has really got hammered in the recent market correction. While the slowdown in the order delivery to the defense sector was already factored in, the government's policy to cap the margins of companies in the defense space accentuated its fall. However, is the fall justified? Let's take a look. First and foremost, these developments are already factored in the price considering that the stock is trading at around 11 times its next year's earnings and currently offers a dividend yield of close to 3% based on current year dividend. Current valuations are significantly lower than the historical averages. Over the last 10 years, the stock is traded at an average price to earnings valuation of about 16 times. Reverse calculations suggest assuming an exit PE of 15 times in FY21, earnings for FY21 works out to be Rs 5.6 per share. Considering that in FY18 the company reported an EPS of Rs 5.7 per share, this implies that the market is expecting a negative earnings growth, which appears a remote probability. Coming back to margins, government's cap of 7% margins for the nominated projects would not have a significant net impact, considering that this is going to be applicable for the new order book that will probably get booked from the year 2021. Secondly, by the end of 2021, the share of projects won based on nomination basis would decline to about 35%. Rest will be projects that the company has won independently through competitive bidding because of the declining legacy orders and execution on one large project pertaining to long-range surface-to-air missile program. Considering these facts, the management has guided to a net impact of about 50 to 150 basis points, that too from the fiscal year 2021. Margins will still be healthy at 17 to 19% range as against the operating margin of about 19.4% and 20.5% witnessed during the last two fiscal years. The defense pipeline is very strong and BEL has a strong market share with proven capabilities without any threat of significant competition, considering there is huge entry barrier in terms of approval and time taken to build capacity and capability. Nevertheless, apart from the strong economic moat, the revenue visibility is good and predictable considering that the company is sitting on an order book of close to Rs 50,000 crores, which is about 5 times its sales. To sum up, one is buying a company which has a debt-free balance sheet, has no promoter risk, and where business is protected because of the entry barrier and has a decent amount of certainty and predictability of growth because of the strong order book. Once near-term worries are behind, BEL should certainly command higher valuations. One interesting factor to note here is that the company had traded at 25 to 32 times its forward earnings, whereas now its current valuation is of close to 11 times. Now friends, please don't consider this to be a recommendation on our part. Please go ahead and do your own research. This is part of a research which was carried out on our television channel, and we will be providing a link to the article in the description section. Thanks for watching, and if you have not yet subscribed to this channel, please consider doing so.